everybody, and welcome to today's special webinar event in which we'll be discussing the best cash flow opportunity in Australian real estate. I'm Terry Ryder, founder of Hotspotting, and today I'm discussing real estate markets and opportunities with investment expert Danny Buxton from 000 Property. Danny and I are going to discuss prospects for property investment generally in 2024, but with a particular focus on SDA properties and the excellent potential they have to provide great results both for the tenant and for the investor owner. So stay tuned for some important insights that could transform your investing career, and also for a special offer at the end of today's discussion that you won't want to miss. So Danny Buxton, 000 has had a great track record of helping investors identify opportunities in real estate, and we see 2024 as a year of opportunity for investors. But what would you say is the one key word for investors in 2024?
Look, thanks, Terry, for having us on this webinar. One key word, action. The word action.
Yep. And I think I know exactly what you mean. Both you and I know from our many years of experience with working with property investors, a lot of people out there who think they want to be investors, but they find it very difficult to actually take action, to move forward. A lot of wait and see people out there. And because of that, a lot of people have been missing great opportunities in the last few years.
That's certainly the case. And I mean, we look back at the end of each year with just a review of the year that's been internally, but also for our clients, and then compare that with other years. And then we reflect on how that year began. And I think we see a lot of people that we talk to, you know, they attend all the webinars, which is great. We gather that information. They read all the books, but they actually don't do anything. And you know, you don't create wealth by attending webinars and reading books. You actually create wealth by actually doing something and taking that first step and taking that action to build a portfolio. Whether it be a cash flow focused one like we are talking about today, or whether it be a growth focused property, which we do a lot of as well. And I look back at this last year, and at the very beginning of the year, everyone was predicting a negative net result across the whole Australian property market. And certainly the markets where we've been active in, it's been quite the opposite. We've seen great results where clients have seen a real significant uplift in the value of their investments, even the ones that we actually are currently working with at the moment, that by the time that property is completed, because we deal in new properties, by the time that house is complete, we've already seen an uplift in valuation and increase. Some of the ones we have been doing in Adelaide, we've seen, you know, a significant uplift from 12 months ago to now. And the same again in parts of Southeast Queensland where we've been fairly active as well.
A lot of people, if they'd believed the media forecast this time last year, they wouldn't have taken action. But of course, those that did have seen, particularly in the best locations that we've recommended, they would have seen uplift of 10, 15, 20% in the last 12 months.
100%. Yeah, 100%. And that's absolutely right. And I think that's the challenge. I think people, and it's really important for, and we talk about this a lot, you've got to build your team of trusted advisors. And I think the thing is, I think a lot of people think that they don't need an advisor, they don't need someone. They'd rather try and do it themselves. And look, I made that mistake just recently in buying a car helping my son buy his first car. And I did all the research, read everything. Whereas now there are some very good brokers out there who can help you find the car that's right for you and stop you from buying a lemon. I still got an okay car, but I think I could have done a lot better if I had someone who knew what they were doing.
And of course, the sums of money involved with real estate are just so much higher, so it's so much more important to expert advice. And we're about to talk about a particular type of property investment, which more than any other type that I'm aware of in real estate, you do need to access good advice. But firstly, just generally for 2024, we see it as a year of opportunity. And I guess one of the key words is shortage. We still have a shortage of everything important in real estate, which means we're going to have continuing upward pressure on prices and rents. In the second half of the year, we've got the prospect of income income tax cuts and also interest rate cuts possibly. So is that how you see it, 000, Danny?
You sum it up perfectly, and I think the shortage is going to be exacerbated by the lack of new dwellings and the continued lack of new buildings, and it's not something that's going to be solved tomorrow. It's going to take a number of years, in particularly these locations where we're seeing high demand and growth from a population demographic perspective. And so it's really understanding those, the data, and understanding being able to take that data, which obviously you guys we work very closely with to help us understand that, to then decide where we want to and where we want to be. And look, I think I feel for some people who are in the rental market because of the affordability, but until we see significant action by government in not just releasing more land significantly, but reducing taxes that are there for developers, and the cost with both state and council taxes and red tape, but also to, and some people don't like this, but I think we need to have greater incentives for investors to, and my little bugbear is, why do I pay a slightly higher interest rate on an investment loan than a PPR loan, on my own property loan? It just doesn't compute for me why it needs to be higher. So those sort of changes need to happen.
More incentives for property investors. What we've seen more recently is disincentives. But nevertheless, there are myriad opportunities this year for investors, whether they're seeking capital growth or high returns. And for those who prioritise yields in particular, what we're suggesting is that there's no better cash flow opportunity than SDA dwellings. Now, Danny, in simple terms, what are SDA properties?
Look, Special Disability Accommodation, SDA, is an initiative of the government through the NDIA. A lot of people confuse SDA housing as an NDIS. It's just part of the NDIS. It is, but it's actually a house that is purpose-built for participants who have special needs. And then the government provides funding to those participants depending on the level of their disability and what they're able to, I guess they have to submit to the government to receive this funding. And then the government will then will give them funding to pay for accommodation that meets a certain requirement, where that house has to be registered as an SDA home. So it's got some great uplift and great potential. Also, there's a lot of questions when I talk to people about, with the media talking about really looking and reviewing NDIS spending and costs. That's more referring to providers and the providers providing services to the participants. Housing is a separate thing. It's something that's been legislated by government and been supported by all parties, and is in place for 20 years. They made a minimum 20-year commitment. We're partway through that, at the really beginning of that process. But it's, for example, for a participant or a person with a disability, if they're in inappropriate care, so you might have a person who's in their 30s in a nursing home because they need that ongoing care and support because there's not a home that's right for them, it can be costing $8,000, costing the government $8,000 a week just for that person to be there. So for them to provide funding for that person to go into a house, which will flow through to me as the investor, makes a lot of sense. And in fact, they just recently changed. Well, they just recently changed just in July, where it increased significantly in one of those areas. But it's indexed to CPI, and so we do see that regular increase coming through.
Is it fair to say it's something there's a great need for throughout Australia, and generally there's a shortage of these sorely needed properties around the country?
100%. And I think the challenge is there are a lot of people who are jumping on, or we're seeing a lot of builders or people that are just through general marketing, marketeers who are promoting SDA houses as a solution. But when we see those plans, or we see where they're going and where they've been put into, you may get a participant in it. I say may, but as soon as a better purpose-built house that's specifically built to their needs and requirements, even though it meets the guidelines that the government puts in there to be registered as an SDA house, it's not participant-led in its build and its design. And I think it's really important that when you're building these homes, that for these individuals with disabilities, that we're prioritising livability, usability and comfort, with a real focus on enhancing the overall experience for those that inhabit these properties.
So a good outcome with these properties is kind of a win-win situation, isn't it? It's an opportunity to provide something for which there's a desperate need in the community, but also from the viewpoint of the investor, you're providing for yourself a great cash flow investment.
Look, I love it. I mean, I'm investing personally in this space, and what I love about it and about social housing in general is I'm not just, well, I think any house at the moment has a positive impact because we're providing housing for those in need, which is a lot of people trying to, especially in these areas of high demand, but particularly some of the most vulnerable people in our community, being able to provide a specific property for them where they can, that's purpose-built and designed around their needs, that's going to give them their forever home. And I think that's really important to understand.
What we've been saying about SDA properties in preparation for this event today is that they offer the highest rental yields that are available in the residential property market. And it gives a kind of a ballpark of the sorts of rental yields that are possible with an SDA property. I know they vary from one type to another and one location to another. What's the ballpark?
Yeah, great. I mean, it is right. It is like there is some location dependent, but there's what they call a location factor, and that's based on a variety of needs which the NDI have put into play in their funding models. But look, we have clients who are getting, depending on what type of house we're building, if it's an improved livability home, which is there are 4 different types of improved livability, fully accessible, robust, and high physical support. So if we have a client who's doing improved livability, so it doesn't need all the extras that might be required in a high physical, it might be somewhere in that 900,000 plus mark, and we're seeing projected rental returns between gross of 140,000 to about 160,000.
What would that be in percentage?
So you're looking around about that 16+%. And then in the high physical, projected rents up to from that 170 to 100. I've got a client on 197,000, and that will be indexed to inflation, and they're gross. And by the time you have your management fees and other fees taken out, you're still getting a net rent of around that 100. 110, 120, depending on who your provider is and what fees they're taking. So 160, 170. It's a little even more depending on who that provider is and the fees that they're required to manage that property for you. So it's very, from a financial perspective for me as an investor, I love it because I'm not only am I creating a home for someone who's very vulnerable, but I'm also actually creating a significant cash flow for myself in that process, or our clients are. And we're having clients who this is their solution to their retirement, where they can now, through just one property, create a passive income over $100,000 or $150,000 just through the investment of one property.
Just to reiterate that, if you get one of these properties that you've built as an investor, you've got it all right and it's ticked all the boxes, you can have a positive passive income above 100 grand just from one property.
Yep, 100%. Whereas in the past, for us, when we're talking with a client, we're working with a plan, the client might have to have 3, might even have to have 5 or 6 properties then to get that position, or 3 or 4 properties to get to that position to provide that passive income. Obviously, it's all dependent on their debt, but I mean, the great thing with this is with a special disability home, if it's running the way it should and it's done properly, it pays itself off really quickly, even with with the way it's done. But there are a lot of challenges involved in getting this. It isn't, a lot of people are interested in it, but it's actually not for everybody. And it's really important that we, I guess, sit down with clients. We just really understand firstly, their goals, what they're trying to achieve through that process, understand if they've even got the financial capability. We do see a lot of people where they talk to their financier or their broker and they say, yeah, we can do it. But then when it actually comes to doing it, they can't get the finance. And so we've got we have a specialised broker who deals in this space, who himself and his team, he has an investment property through an SDA property. He understands the lending criteria and the process, and has flexibility both through actual banks and through non-bank lenders in working that through. So again, it's building the right team, and this is what we always talk about. Having the right team who have experience, not someone who can just talk about it and push a package in front of you, but has been working in this space for some time, working with clients for some time, if they're helping you find that property, but also has done it themselves and has gone through the process themselves. So they understand every bit. I don't take advice from, you always take advice from someone who's actually been there and done it and is doing it. They're walking the talk, not just talking it.
So, and we do have a special offer we'll talk about more towards the end of the webinar today, where people can actually sit down and talk with you and your team in more detail about what's required and whether this type of property suits them individually. But this is one type of property that you do need to get right. It does need to meet specialist criteria. So how can investors do that effectively?
Well, the first thing is we just need, as I said, we need to understand their financial capabilities. We need to understand as an investor what they're wanting to achieve in that process. But it also, I think an investor needs to understand that there's always risk in investment, in any investment that you do. But if you don't get this right, and I just really want to reiterate this, if you don't have the right people around you and you don't do this right, it can create a world of pain because it's really important that you are working with not just getting the build right and the right builder, because again, you want to make sure you've got a cash strong builder who you're working with, who's very financially capable, but they've got experience in this. They haven't just done one or two, but multiple properties, and they're in this space actively. That for us, we work very closely with a social impact housing specialist, and Renee for us has been probably not the missing link, probably the missing link for us as a business, where she has that experience. She's got relationships with SDA providers throughout the communities and the areas that we are building these homes. She's there actively going, Danny, this is where you got a client who's now ready to go. They've ticked all the boxes. We've got our borrowing, whether it be somewhere around the 900,000 or 1.2, depending on the type of property that we're going to go through based on that client and what their capability is. We've got a client here. It's not like there's a stock list. We're ready to go. And they're actively continually talking to people in that space and go, great, Danny, here is one. And they move, if I don't move quickly, because we might have a very short hold on that block of land with the developer. And sometimes we even have to fight with the developer to let them. I've had instances where the developer said, look, we're not really comfortable with someone with a disability living here. And I don't think they really understand. And there's a stereotype of someone with a disability. God forbid I could be driving home and have a car accident tomorrow and be paralysed from here down. I'm a person who would then qualify if I got the plan in place to live in one of these homes.
So is it say that this is a type of property investment that the average investor cannot do themselves through research and having a crack at? You do need to have expert advice on board every step of the way, including dealing with the builder that knows exactly what they're doing with this specialist type of property. Yeah,
and I think you need someone like Renee who we work with. And for us, even as a company that does this and specializes in this, we rely very heavily on Renee and her team around her too, because they live and breathe and been living and breathing this space for over 20 years. So they in the disability space. So they are they're involved so much in the design of the homes, working, participant-led designs, constantly working with the carers, looking at where those areas are where there's a real demand for these property in high demand areas where there's real hotspots. We've got to move away from the build it and they will come scenario, which a lot of people take. You need to look where there's going to be an ongoing requirement for these homes.
So, Danny, how important is it to get the location absolutely right with these style of property investments?
Any property you buy, location is paramount. That's why we use location reports and understanding research. The reality is with special disability accommodation, location is absolute paramount, but there's a different set of criteria that are required in looking at what you're looking for. People with disabilities still want to live in places you and I want to live. There's sometimes people say, "Oh, we'll just build it over here where it's out of sight, out of mind," and the government doesn't want that, and certainly people with disabilities don't want that. They are just as much have every right as you and I do to be living in our community. So, there's some key things like access to shops and medical facilities and parks and recreational facilities as well. Even if they're in high physical support, their carer may take them for a walk. They love to go to the shops. It gives them something to do if they're not, depending on what level of needs that they have. But it's also to the selection of the land is really important. We have a lot of clients who come to us and go, "Hey, I've got a block of land here, which I'm going to cut off my property. Can I build it there?" And it just doesn't work that way. There's so much more to it than that.
So this is not your typical home build. It's a very specialist type of property. And I know it varies from property to property and location to location, but can you give us a kind of a ballpark at the level of investment money that's required
Sure.
to do one of these typically?
Well, the cost of the build is obviously more expensive because there's technology and additional things that need to go into that home. Your participants will all have their own bathroom, so you might have 2 participants in a house. The government's moving away from group homes where 3, 4, 5 people live in a home. They really like where you might have, again, depending on what you're buying and what you're building. But typically for a house with 2 participants, improved livability, we're somewhere in the 900,000 mark, depending on the cost of the land. With a high physical at the other end of the scale, which obviously you get more rent for. You're probably looking around that 1.15 to 1.25 at the moment. A lot of that's land price dependent. The build prices will vary too, depending on. With my house, I had the opportunity of a biggish sort of block, so I said, let's just make it as big as we can and as participant friendly. So it just really creates a wonderful environment for the people that move into that home. So I was prepared to pay a little bit more to make my house a bit bigger, because that ensures for me that my participants, when those participants move into that home, it's their home, and they don't want to leave because they can't find anything else that compares with maybe someone building a shonky one around the corner or up the street.
And I imagine you get some potential participants coming to you and saying, "Okay, I understand I'm going to spend a little bit more than the average home build. Are there any sorts of guarantees, any government guarantees, rental guarantees to give me some comfort taking on this commitment?"
Yeah, look, it's rental guarantee. No, there's no rental guarantee, and it's really important that you shouldn't be refraining from those tenant guarantees that people may offer. For us, when you engage with, we engage with our NDS providers at the very start of the process, even before we even start presenting an option to a client. And it's important to understand that it's actually the house is not the one that receives the funding. The house is a vehicle for the participants, or the property that the participants will move into, and the participants receive the funding, and that will flow through the SDA provider, which is like your property manager, and they will then pay you, and they'll obviously take their clip along the way, which property managers do in that process to manage the care providers or the SILs or the people that are supporting that participant. We are very careful, and we do demand checks, and through our network connections, through working with our social impact housing specialists and with the building team, and they with us do a lot of work about where that needs to be, so we can give every opportunity to get that property rented as quickly as possible. Where people have issues is because they're in areas where there is a cluster where maybe everyone's gone to a certain area because it's cheap land, and that's actually not where the demand is. And so there's a bit of competition in that regard. But if you do it right, you shouldn't, you're going to always be in good stead, just like any other investment that you have. And when you do, just look at it differently.
I just want to remind everybody watching and listening today that we'd like to receive your questions, which you can give us by typing them into the chat box, and we'll do our best to answer as many of your questions as we can in the time we have available, and remind you also that at the end of the webinar, we're going to be giving you details of the special offer that Danny Buxton from 000 is making available today. So please give us your questions, type them into the chat box. Danny, I imagine another one of the questions that you get from people interested in this type of property is resale value, capital growth. Is it any different for this type of very specialist real estate?
Yeah, it is. I mean, look, the houses are built and designed that we do can quite easily be retrofitted back into a normal home. So, it's not too difficult for someone to do that. I mean, there'll be a bit of cost, but there are, and we've seen this where, if you've got a property that has some participants in it, you can then go down potentially a commercial valuation sale where someone might pay a 7 or 8% factor in the purchase of that property. So you can see some uplift and growth in that particular scenario. Send it through your local real estate agent. There's some challenges there, particularly from an investment perspective, because people just need to understand what's going on behind the scenes. So it's just something they need to be wary of. For us, I'm not concerned if I need to sell it. I've got people around me that do sell these things, that sell these properties once they're up and running and complete. And there are some funds that are quite happy to look at this, because it's now, they can see the return is there and it's up and running. And I'm the one who's taken the risk, quote unquote, to go through the build process, and they're not interested in that. They need the return from day one.
Okay. Just before we start dealing with some of the questions that people are typing into the Q&A panel or the chat box, Danny, you do have a special offer which relates to what people can do if they're interested and want to get more information. So perhaps, Tim, if you could just share on the screen the details of that offer. But Danny, you have an obligation-free discovery session that you're offering to people.
Absolutely. So, I mean, look, obviously this may spark a lot of interest for people, and people might be surprised this is something they can do, but it just gives us the opportunity to have a conversation to understand what you are as an investor is trying to achieve. We can have a bit of a look at where you sit. We can then send you to, if we feel that this is right for you and you want to move forward, we can then send you to our finance team, which is independent from us, but they understand the process. We don't want to go through the process unless we know, because there's a significant cost and time and energy and effort that goes into sourcing one of these options. So we want to know that you as an investor have the ability to move quickly and can do this. So we'll also provide you with information for you to read and listen to. Terry and I met late last year, and we did a very detailed conversation with some other key people involved, and they can provide some further information to you, and you're more than welcome to obviously send that to you with some links to some other websites and information. And then if you do proceed and you do a property with us, we'll then provide a premium hotspotting membership, and we as a company will gift that to you in conjunction with Terry Ryder and Hotspotting.
Which has a retail value of a tick under $2,500. So it's and it gives access to all the research that we have, all our hotspots reports, all our resources, including our new research portal that's available to our members.
And it doesn't matter, if you're an investor, it doesn't matter if you are someone who's wanting to do this through your super. It can be done through your super fund. So there are opportunities. We have a client at the moment we're working with, and just get everything in play. There's a slight more cost to do it through your super fund, because the build team will then, just because of the way lending is involved. Again, actually got a couple of people doing through super funds. I've got one who's just doing it through cash in their super fund, so there's no additional cost. But if there's lending involved, there's just a little bit of challenges that exist there, and our build partner is able to manage that process and carry the cost and the build until you're able to then settle and go down that path because of the lending requirements in super.
Just ask.
So it's great for super, because in your super, and again, I'm not a financial planner, and I really probably should have said this at the very beginning, anything and everything that we are talking about today in this conversation, in fact, in any conversation you have about wanting to do invest in a property, speak to your team and your professionals around you. Get independent advice. Talk to your accountant. Talk to your financier. Talk to the people that are trusted, not people who just sit around the barbecue having barbecue chats, but your team of professionals, because what might be right for you is not right for somebody else. And so it's really important that you get that advice. But in super, I like this in my super because I'm getting a really good yield. And so, that's one of the things that you look for in a super fund is the return on investment.
Yeah. And you've just answered the first of the questions that people have typed into the panel and chat box, which is, are these properties available to all investors, including self-managed super funds? And what you're telling us is that not only
the answer is yes, if you've got the capacity to do it. The answer is yes, if you have the capacity, and we can help you to find out whether that's right. And if not, what you need to do to be able to get to that.
Yeah. And Harry's asking, how much deposit do you need to acquire a property?
Well, that again comes down to the conversation you have with the lending team, but 20%, depending on which way it goes. Depending on which way it's looked at, we've had some clients who've just gone through a traditional lend and they've been able to borrow just through traditional lending. But it is really important that it's presented and to us in a certain way, but through a traditional lend. If it might not be uncommon to see a valuation shortfall, because the cost of the build will be so much more than maybe a normal house. Having said that, we've seen some that haven't. There are some specialist lenders out there who, particularly one, and they, I think, do an 80%, maybe more. I'm not too sure. That's a question that we would put onto our finance team that we work with. But 20%, if you've got 30%, even better. The more deposit you have, the better. But yeah.
Harry's also asking, how long will it take to settle if it's done through super?
Through super? Well, your typical build time, by the time the slab goes down to completion, we'd expect would be around about that 32 weeks. So depending on when the land is ready to start and when we've got that commitment and we know that you have the financial capabilities, we would then have the conversation with our specialists, our social impact housing specialists and our build team, and then they would come back and then we would go through sourcing a particular property. Even sometimes they'll say, hey, Danny, we like this one, but we've also got this one over here. And then I'm looking at it also through our set of eyes, where does it meet, where does it tick, both from even from a traditional perspective as well. But once you settle on the land, your typical build time is normally about 6 weeks from there before you start, and so then about 32 weeks. So if you allow 40 weeks from settlement on the land, you're going to be pretty close. Obviously, there are variables like weather we can't control, but all things equal, around about a 32-week build time.
The next asking, what is the typical SDA provider fee percentage?
Great question, Nick. Every provider is going to be a little bit different. And so they can vary from 10, 11% to 15%, 16%, depending on what's involved and how they do this. Each SDA provider does things a little bit differently. So what we do is once a client has gone unconditional or settled on their land and we're just getting ready to go into the build process, we would then introduce them to 2 or 3 providers and who has, through our social impact housing specialists, has had those conversations with and give them the information for them to be able to have the conversation and then obviously work with us, our social impact housing specialist with Renee, working out which is the right one for you and who do you feel comfortable with. But we'll only recommend those that we feel are going to give you the result that you're looking for and give a great result for the participants, but also for you with longevity in that investment journey.
Okay. I was asking, are there any concerns about saturation of the market?
Absolutely. And that's why we work with our social impact housing specialists, because they have up-to-date data knowing where and what to ensure that there isn't saturation. And even in some of these saturated markets, where there is a few that might be there is a high percentage of some of those people wanting to move out because their properties are not really fit for purpose. But they've gone into maybe a legacy home, or they've gone in, which is an old stock, or they've gone into something that's just been renovated and it's kind of working, but it's not really ideal. And their funding will give them something much better.
Danny was asking, and I hope you understand this question, Danny, what is your opinion on IL, considering there is for IL to be removed from the SDA category?
Look, again, there's some talk in the latest report that came out where IL will probably still be there, which is improved livability, and it may go in conjunction with another category. And that's why we build the homes for certain specification and design, but also too, if your house is then registered into the SDA, and then you have a client who has that IL funding and they're going to be in that home, they're still going to live in your home. And because and those changes, for example, the changes that happened in July last year, people who had built previously to that, they are grandfathered into that program for that SDA. Their house was registered and entered why it was here, so they're grandfathered there. So if I build where I'm building now, I'm either grandfathered. If they make changes, good or bad, I'm grandfathered into my funding model with my SDA, or why that participant has that improved livability funding that's there. But there'll always be a need for people with improved livability, but whether they then amalgamate, and it's just a conversation that's been had, doesn't actually mean that it's actually happening at this stage. And again, we just keep talking and referring back to our social impact housing specialists about those things.
Okay. Wayne says, you mentioned the scheme being set up for a minimum of 20 years. When would you expect a requirement to update the property with new technology? For example, the original build is superseded and perhaps no longer the most desirable property for the tenant's needs.
Yeah, great question, Wayne. I mean, look, it all depends on, for me, my property, if 10 years from now, there's the ability to do some things there to add to the property to increase the livability, because I have no idea what technology will be here in the next 10 years. I'm sure there'll be some pretty cool AI and things there that will assist. For me, if I'm getting $170,000, $180,000 in today's money, I'm quite happy to invest a little bit more back into that property. It's just like any other house that you have. If you have a house and you don't do anything to the house over 20 years, there's things that you need to do to that property to keep it attractive to your next level tenants. But again, as I said, your property is also grandfathered in, so that funding is going to be there for a period of time. For that period of time, that's being allocated by the government. So.
Okay. Another question has come in: do you also build robust and fully accessible properties for investment purposes? There is a heavy focus on HPS due to high return, etc.
Again, depending on, it comes back to, again, those areas of demand, and where we're looking at doing those properties. So there has been a high focus on the HPS. A lot of houses, and we had some clients where we've done a 4-bedroom house with 3 participants, because that's the way the government had been pushed for. The government's now come back saying, hey, look, we now want to go to 2 homes. So again, if you're going into an area where there's a high saturation of HPS, we're not going to be doing a HPS house in that area. For me, robust isn't something that we're looking at the moment. And certainly, that improved livability is why they've increased. The reason why they've increased the improved livability funding just in July, and they significantly increased it because people weren't focusing. The returns on the improved livability wasn't that strong. There wasn't a lot of people building them, so they've increased it to create a need or a desire for investors to build improved livability. So there's yes, your question's right with HPS, but I'm building a HPS house because where I'm building it, there's not a lot of HPS homes, and there's a massive need for those, and will always be. But again, it comes down to the demand mapping, and again, your circumstances and what you're doing. And for our clients, we're building a variety of those 3. But robust is something that we're not involved with at the moment because of what's involved in the building of that property at this time.
So, Danny, we began the discussion today. I asked you what's the key word for investors wanting to achieve something in 2024, and you said action, the willingness and ability to take action. For those who would like to follow up from today's discussion and find out a little bit more, you just reiterate your special offer and how people can take action with 000.
Look, absolutely. Look, there's a lot of information we haven't covered. We've only really just touched on the surface, and it's imperative that you really understand the detail, because the devil's in the detail in this, and we want to make sure that our clients have everything they have behind them to ensure every chance of success in any investment that they do. So I'd love to sit and understand what it is you're trying to achieve, or have a talk through with some questions as you're trying to do that. It is obligation free, and look forward to that opportunity to have that conversation with you.
Okay, so I urge people to, if they've got further questions, any interest in this style of investment at all, follow up by emailing invest@000property.com.au or phoning the number provided 1300 897 000. Danny Buxton from 000, thanks very much for your presentation today. Lots of great information, but there's just so much more to know about this type of property. Our objective today was give people a sense or a taste of this type of investment and its potential to be a win-win situation, both for tenants and investors, and from the viewpoint of investors providing extraordinary rental returns, and the possibility that one property could provide the cash flow passive income to take people through retirement.
Look, absolutely. I think you've got to really have a client-centric approach, both for our clients, but also for the participants that are looking at and making sure that these houses and these homes, I probably prefer to call them homes, really are participant-led in both location and the style and the design, but also allows you to achieve your goals through investing. And I think it's a great opportunity, an exciting one, to know that you're also making a difference in people's lives. And I can't think of a better investment from a cash flow perspective.
And if I just reiterate the fundamental importance with this type of investment, to access really good advice from people who have done it, been there, done that themselves as investors, but also as professional advisors, and make sure you're doing it right. If you do, results can be spectacular. Thank you, Danny Buxton, for your participation today and great information, and hopefully lots of people will follow up and ask you lots of more questions.
Yep, I think like everything, whatever investment you do, you need to take action, and it obviously starts by having a conversation, but don't just leave it at there. Do anything and everything you can to get yourself in a position where you can move forward and actually take that first step.
Okay.
Thank you, Terry. Thank you, listeners, for obviously being part of today's webinar, and look forward to chatting more with people as we move through.
Thank you, Danny, and thank you everybody for your participation and attendance and your questions and comments. And please, if you've got any further interest, please follow up by making contact with Danny and his team at 000 Property. Bye for now.
Thanks, Terry.